As of May 1st, 2023, some new federal rules went into place that will change how much you'll pay in closing costs for government-backed loans. The good news is that if you're somebody that has a credit score on the lower end, these rules could actually save you thousands in closing costs. The bad news is if you're somebody that has a higher credit score, you're more than likely going to end up paying more in closing costs. So in this video, we're going to get you up to speed with the new rules that went into place regarding how much you'll pay in closing costs based on your credit score and your down payment. We'll also discuss why the new changes went into place, and we'll go through some scenarios to show you how much you could expect to pay if you're on either side of the spectrum. Hi, my name is Trent Ward, and if you enjoyed this content or found anything helpful, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. Okay, so first let's start off by talking about what the new rules are and what they're supposed to accomplish. The new rules recently put into place that will affect your closing costs are referred to LLPAs, which stands for Loan Level Price Adjustments. These are the rules used by Fannie Mae and Freddie Mac that help determine how much you will pay based on the things like down payments, your location, and yes, your credit score. The Federal Housing Finance Agency Director Sandra Thompson recently released a statement on these changes. She goes on to say that the FHFA is taking another step to ensure that Fannie Mae and Freddie Mac advance their mission of facilitating equitable and sustainable access to home ownership. So in the eyes of the FHFA, these changes, although they can seem like they're punishing some, are in efforts to stay true to the primary goals of Fannie Mae and Freddie Mac. And you can relate this directly to the sharp spike in housing costs we've experienced over the past couple of years. Because as house prices and mortgage rates rise, so do the closing costs to get your average home. And this is one of the largest barriers of entry to home ownership for many people that would otherwise be approved for these types of loans. So now that we have an understanding of why the new changes went into place, let's learn about how they will affect new and current homeowners. These new changes won't affect you if you already have a loan through Fannie Mae and Freddie Mac. The rules will only apply to those that are preparing to get a new mortgage after May 1st of 2023. But if you're planning to refinance your current mortgage, that new mortgage will be subject to the new rules that are now in place. And with that being said, this is likely to affect a large number of people looking to purchase or refinance a new mortgage, because FHA is one of the most used programs for first-time home buyers. And on top of that, it's one of the most favorable loan options when you have a lower credit score. So one way to look at this is that the benefit gap between having a good credit score and a bad credit score isn't as big as it used to be. So yes, if you have a good credit score, you're likely to pay more in closing costs going with a Fannie Mae or a Freddie Mac type of loan. But you still wouldn't pay as much as you would have if you had a lower credit score either. So to understand the changes a little bit better, let's talk through the following scenario as an example. All right, so let's say that you are a home buyer that has a credit score of 740 and you plan to put 20% down for your new home. If the home you want to purchase is $400,000, your LLPA fee would be $4,000 versus $2,000 with the previous fee structure. So unfortunately, that does mean that your fee would literally double in this scenario if you're somebody that has a good credit score and can provide a large down payment. All right, so now let's go through a scenario on the other end of the spectrum. Let's say you wanted to buy the same house and you had a credit score of 640. And let's say you wanted to provide a smaller down payment of 5%. Well, in this scenario, you would actually save money because previously your LLPA fee would have been $11,000, but now it will drop all the way down to $6,000, which is a huge savings of $5,000. So as you can see, even though the fees are going up for a lot of people with good to great credit, it still would be in your best interest to keep your credit score as high as possible. Because in this scenario, your high credit score and down payment will still save you $4,000. But let me know what you think in the comments below. Do you agree with the changes by the FHFA? And let me know if you think this will help or hurt the housing market. Okay, if you found this information helpful, let me know by hitting the like button and consider subscribing to stay up to date with the latest real estate news, tips, and tricks. If you have any real estate needs in the Dallas-Fort Worth area, feel free to reach out. My contact information will be in the description below. And until next time, peace.